Alright, this is Ubaid on behalf of V Electronics, and in this video we're going to be talking about something called currency exchange rates. And when we talk about currency exchange rates, we're talking about exchange rates of currencies worldwide. Okay, so you may have the value of a currency as $1 okay, today. However, tomorrow it may be $1.20. Okay, so it may be equivalent to $1 today, but tomorrow it may be $1.20. Now, this may be true of Canadian currency. This may be true of Britain pound. Okay, it may be true of any other currency such as euro. Okay, so the idea over here is the currency exchange rates fluctuate throughout the world. Okay, and the exchange rates are based on many factors such as your GDP. We talked about GDP, how it has four components, okay, four divisions, okay, or four parts to it. Okay, number one has to do with personal consumption of consumers within that country. So how much they spend, how much they make, how much they spend, so on and so forth. Okay, next it has to do with government spending on infrastructure. So things like transportation, highways, okay, hospitals, libraries, okay, so on and so forth. Okay, and then you also have, okay, things like business investments. Okay, so if you have foreign investors, for example, corporations, or, okay, if you have, okay, businesses within the country who invest in the country's economy, okay, that would be an example of business investment. And last but not least, it has to do with net exports, which has to do with import, takeaway, export. Okay, if your exports are more than your imports, obviously, okay, it will lead to a positive GDP, which means it's good for the economy. If imports are more than your exports, it will lead to a negative GDP, which basically means it may be bad for the economy depending on the circumstances. All right. So the idea here is to make sure, okay, that your GDP is at a level where your currency exchange rates are reasonable. Okay, so if your GDP is too low, okay, if it's negative, for example, then obviously, okay, people are going to end up in an inflation. Okay, why? Because the currency exchange rates are going low. Okay, and inflation brings a lot of trouble. Okay, the value of the currency goes down, as a result of which, okay, people are able to buy less with the same amount of money. All right, so basically, okay, with the currency exchange rates, okay, it has to do with the rate at which a currency can be exchanged for that of another country. So let me write this down. The rate at which currency can be exchanged, currency can be exchanged with that of another country. So if you take the example of US and Canadian currency, for example, when the Canadian currency is low, let's say if US currency is more than the Canadian currency, which is usually the case, okay, then it's possible to have an influx of tourists, okay, into Canada to buy goods at a better price, okay, less expensive goods, okay, and take it back to the US, okay, which means it may attract tourism, which may boost the economy. It may attract immigration, again, which may boost the economy, and it may attract business investments, which again boosts the GDP as well as the economy. All right. However, at the same time, when the currency is low, okay, people living within that country are able to buy less with the same amount of money. All right. So there is a possibility that the country may go into a recession. Okay. There is a possibility that the country may go into inflation. Okay. As a result of which, okay, it may be bad for the economy in the long term. Okay. So the idea here is the currency exchange rates fluctuate every now and then. And a lot of people take advantage of that fluctuation, especially stock market investors, okay, stock market brokers. Okay, they buy when the currency exchange rate is low and they sell when the currency value is high. Okay, this is how they make profit. Okay, so this has to do with the stock market. And the currency exchange rate is especially relevant to the stock market and stock market investments. So that will be it for this video. On behalf of V Electronics, this is Ubaid. Have yourself a great day.